So in today's video, sorry, first video, in today's class, in today's section, I'm going to be literally giving more light on how the supply and demand concept works, how the rally-based rally, drop-based drop, drop-based rally, rally-based drop, how all of those concepts works in the Forex market. So if you guys have not read the PDF, please go to the pinned messages on the group. The pinned messages in the group, just search for where the PDF is. You see the PDF. Please start reading the PDF to know what we are literally doing in the group. So yeah, supply and demand, like I said in the group, we have four types of supply and demand, four major types of supply and demand. Um we have the drop-based drop, we have the drop-based drop, we have the rally-based rally, we have the drop-based rally, and the last one we have the rally base drop. And if you guys noticed, all of this four types of supply and demand has should I say has something in common. It has one particular thing in common. What is it? They all have a base. Sorry. They all have a base. Let me show you guys. They all have a base. So the most common thing about all of these four different types of supply and demand is they all have a base. So every supply and demand strategy you trade, you must always take your trade off of the base. That is the concept. The base is the pause in the market. Like you guys see zone breaking, retesting. You guys see this particular market is retesting this particular zone for a very long time. So I feel the market is going to go back to that zone to reverse again. All of those pause, all of those zones, they are based in the market. Is it that the market is trending to the upside? Is it that the market is trending to the upside, creating a base, or trending to the downside, creating a base? You guys understand? So this is the one thing in common, all of the four concepts, or all of the four types of supply and demand. This is the most common thing they all have, a base. And two, they all have a clear break of structure. So if you guys have a note, please do to jot down. They all have a clear break of structure. So let me show you guys. Wherever you're taking your trade to, they all have a clear break of structure. This is the most common thing they all have, taking your trade, supply and demand. They all have a clear break of structure. Let me quickly do. Do this for you guys. Okay, here we have it. They all have a base and they all have a clear break of structure. They all have a base and they all have a base and they all have a clear break of structure. So whatever you do in the market, you guys can see this is more like a graph or plotting a graph. But if you understand the concept of how supply and demand works, you would be profitable 98% in the market. You'll be profitable 98% when making your analysis. The only thing that will stop you is market manipulation. Maybe your psychology is not in check, your psychology is not right, your mindset is not good in the forex market. That would be the only thing that will stop you. But technically, analyzing the market will be very, very accurate. So the four types of supply and demand we have the rally-based rally. We have the rally-based rally. Rally based rally. We have the rally based rally. We have comment. We have the rally based rally. We have the drop based drop for downtrend. We have the rally based rally, drop based drop. We have the drop based rally. We have the drop based rally, and we have the rally based drop. We have the rally based drop. So let me explain these four types of supply and demand to you guys. We have the drop-based drop. What does the drop-based drop means? When the market is trending to the downside. So you guys can see the whole concept drop-based drop. It means the market is literally trending to the downside. The structure of the market, it gives you a clear perspective that the structure of the market is going all the way to the downside already. So you know where you are going to be taking your trade off of. You are going to be taking your trade off of a supply zone if the market is literally going all the way to the downside. So we have the drop-based drop. Drop-based drop says that the market is literally going all the way to the downside, creating dropping, making a pullback, retracement, and dropping all the way again. So this retracement the market made and dropped all the way to the downside to break the overall structure. This particular retracement, which is the pause, drop base. This was the pause before the impulsive move all the way to the downside again, breaking a recent structure. This your base is what you want to be taking your trade off of. So I don't know if you guys understand. This your base is what you want to be taking your trade off of. Like I told you guys, the four types of supply and demand has one particular thing in common. The four types of supply and demand have one thing in common. What do they have in common? The base. There's always a base for you to take a trade off of. One. Two, there's always a clear break of structure, either a clear break of structural low or a clear break of structural high, for you to know, okay, this market direction is literally going SX direction or is going XX. You guys get if the market is going here or if this market is going to or this other direction. So they all have two things in common. The base, they all have a base. The base is just for you to know that, okay, here is the pause. And that particular pause is what we call our supply or demand zone that you want to be taking your trade off of. And the second thing, clear break of structure. You must identify a clear break of structure where the market is going all the way to the upside or the market is coming all the way to the downside before you know you want to take your trade. So the next thing you want to do, you want to, like we said, we always want to be taking our trade off of a particular base. So knowing that this particular pause in the market is the base, we're literally going to wait. What we're going to do, we're literally going to wait. Since the higher time frame is telling us one particular thing, we're literally going to wait for the market to react, mitigate. If your confluences are right, the market created an inducement before that zone, or probably that zone has what's it called, an imbalance. That zone has an imbalance. You are good. Take your trade. The market will respect. Take your trade. The market would literally respect. Same thing goes for the rally-based rally. Rally-based rally, you literally know that the market is literally going all the way to the upside. Like the name implies, rally. Something rallied all the way to the downside, all the way to the upside. Rally went up, drop, rally, which is rally base rally. Rally base, created a base. The last candlestick causing the impossible all the way to the upside, breaking the structure, was the base. Market created a base, broke a structure. So what comes into your mind? You want to look for added confluences to take your trade off of this particular base. If the base has an what's it called, inducement sitting before the base, or the base has an imbalance, there's a fair value gap before the base, that's an added confluence. Market returns back to the base, went up all the way to your favor. This is for the rally-based rally. Then we have the drop-based rally. This drop-based rally is simply for counter trend trading. Like you guys know, I do not trade, I do not counter trade, or I do not trade against the trend. I do not trade against the trend. Else, I have a strong confirmation or a strong belief that this particular market is literally going my way or going to my favor. So this is a continuous downtrend. Market is literally going all the way to the downside, making series of lower lows, lower high, lower lows, lower high. Let me do something like this. Making series of lower low, lower high, lower low, lower high. And all of a sudden, the market pushed all the way to the upside. Market pushed all the way to the upside, breaking a structure. This is a counter trend trading. If you know what you are doing, since the market has been coming all the way to the downside for a very long period of time, then the market all of a sudden broke a structural high and broke overall structural high. You know that this market is literally going to return. This market is literally going to return back to its origin. What do I mean by origin? The base that caused the whole move, breaking all of the structure. I'm not talking about the internal structure. This is why I trade higher time frames. I don't like trading lower time frames. Lower time frames, you get your confirmation on internal structures, but if you trade the higher time frame, you see a clear definition or a clear perspective of the market. You get the clear view, the clear structure of the market on the higher time frame. So seeing price breaking this particular base, causing the push all the way to the upside, breaking all the higher time frames highs, you know that the market is literally going to return back to that particular area. Then that's why you look for your confluence, imbalance, the imbalance or inducement and all of those things. You look for your confluence. If your confluence are there, good, take your trade. Market runs all the way to your favor. This is for drop-based rally, and we'll have the rally-based drop. Like I told you, this drop-based rally and rally-based drop are literally counter trend trading, where you are trading against the trend, but with clear confirmation, which is like the confirmation entry you guys use on the 15 minutes time frame or 30 minutes time frame. After market mitigates a certain supply zone or a certain demand zone from the higher time frame, you want to go down to your lower time frame, 15 minutes, to see, okay, as the market changed character, as the market caused a break of structure, all of these things. Do you guys get? So this is it on the higher time frame. So seeing that the markets has literally come all the way to the downside. So market is literally going all the way to the upside, making series of highs, and you started seeing a consolidation on the highs. Then all of a sudden, the market pulled back all the way to the downside, breaking a recent or an overall structure, pulled all the way to the downside, breaking an overall structure. You know that this market is literally going to come back all the way to the up. When you get your confluence, market mitigates, come back down. But the confluence or the confirmation, I would love to see. The confluence or the confirmation, I would love to see in taking my trade off of an the confluence or the confirmation I'd want to see in taking my trade off of a how would I put it, counter trend market. I'd want to see what we call a liquidity sweep. This will give me more confidence in taking my trade. If I'm trading against the trend, I would want to see price valuing all the way to the upside and clear out the liquidity before breaking a structure. So I would want to see a liquidity sweep on taking counter trend, on trading on counter trend markets and everything. So yeah. So these are the four types of supply and demand, the major types of supply and demand that often happens in the markets that we all see in the market, and how you trade supply and demand. You always trade your supply and demand off of a certain base. And the concept of trading supply and demand, like I told you guys, is on the PDF. If you guys have not read the PDF, go to the PDF, scroll down to supply and demand, and you see the four types of supply and demand, how to trade the four types of supply and demand, what you need to look out for when trading supply and demand. As I told you guys, looking out for supply and demand, you'd want to see a clear break of structure, trade your market off of your base, make sure you look up for confluences and everything. So these are the major four types of supply and demand in the Forex market that the market literally presents to every supply and demand trader. It's either the market is going to the downside or is going to the upside, or the market came all the way to the rally is the market is going all the way to the downside and started consolidating, the massive push all the way to the upside, changing its structure. The market wants to now go to the upside and you want to take the advantage, know when to take the advantage. Or the market is rallying, the market is going all the way to the upside, going up all the way to the upside for a long period of time, then all of a sudden, massive push all the way to the downside and market break of structure, then you want to take advantage and you know the particular zone or the particular base for you to take advantage of the market. So I'm literally going to go to the chart now. Put it on USD card. Let me see if I can give you guys an example on the chart. Let me see if I can give you guys an example on the chart for art. Okay, so here we have it. This is USD card. This is USD. This is USD CAD. USD card on 4-hour time frame. You guys can see the structure of the market. It is very clear that the structure of the market from the higher time frame perspective has been coming all the way to the downside. Making series of market has been going all the way to the upside, and finally it broke down. It broke this particular 4 hours zone. It broke this particular 4 hours low. So you know that the market is coming all the way to the downside. So here was what happened. Market rallied all the way for a long period of time. Then finally started going all the way to the upside. Finally started going all the way to the upside. You guys can see, like I told you guys, your zones. Your zones are impulse, are pause. Your zones are pause in the market. Drop. Let me use it too. Drop, base, drop, base, drop, base, drop. This was a drop, base, market rallied, drop, base, market rallied, drop, base. This base was the bullish candlestick you are seeing here, which is the order block. Created the base here. The market dropped all the way to the downside. Now you guys can see, what does the market do? The market rallied all the way, rallied all the way, rallied all the way, rallied all the way for a very long period of time. Then it finally goes to the base. Finally got to the base that caused the whole move all the way to the downside. Market finally got to the base that caused the overall move that broke this structure. Broke the structure and broke this overall structure on the 4 hours. So you know that that particular base is very, very valid. So this was the reason that particular base held all the way to the downside. How many pips are there? Around 96 pips. But it's very obvious that the market will still come all the way to this particular area because we are seeing a bullish momentum now. We are seeing a bullish momentum now. The market has been mitigating demand zone, breaking structures and everything. Here's the liquidity. So we are seeing a bullish momentum, but the market is literally going to all the way to this particular demand zone, then react off of that particular demand zone. We can literally take advantage on that trade. So you guys can see how this concept applies to all market conditions. Right? If you are trading BTC, if you are trading all market conditions, supply and demand principle applies to all market conditions, and you literally want to know when or the time frame to use to analyze the market for you to get a clear perspective on the market. Let me show you guys a quick analysis before we enter this section. Let me show you guys a quick analysis on BTC USD. So everybody has been doing the most on BTC USD, and me, I've been waiting for BTC USD for a very, very long time. Although the market hasn't gotten to the point yet, I analyze this market from the monthly time frame. This is the same principle I want to give you guys, so you guys should take note. It's the same principle from the rally base rally. Market consolidated, dropped, drop, base, drop. Market has broken a structure. Market has broken a structure. This is on the monthly time frame. I've had this analysis for a very long time. Drop, base, drop. You guys can see that the market has literally changed its structure, or it has changed its direction. Like you guys know how we trade, supply and demand will always want to know the structure of the market, where the market is actually going to. Rally, base, rally, uptrend, yes, good. Market came all the way to the downside, mitigated, went all the way to the upside. It failed this particular demand zone. So this particular low did not actually hold to tell you that this market has broken this low, then wants to reverse all the way to the downside. So what do we do? Like I told you guys, we always want to take our trade off of the origin. What's the origin that caused the move all the way to the upside? Let me go to the weekly time frame. The origin that caused the move to the downside, breaking the overall weekly or monthly structural low. This was the origin at the top. And you guys can see from what I told you guys on drop based rally, what's it called? Counter trend trading. I'd always want to see a liquidity sweep as a confirmation entry for me to go in on this particular trade. So this was my confirmation entry to know that, okay, this market, BTC, whenever I get to this particular supplies, it's definitely going to come all the way to the downside. On the monthly time frame also, there's an imbalance there. The price is literally going to fail. After filling the imbalance, price is literally going to still going all the way to the upside to fulfill its purpose. Liquidity sweep happened there, clear break of structure. Price is most definitely going to the supply zone there to probably give us a good sell all the way to the downside. So this is on the weekly time frame. Just imagine catching this trade on the weekly time frame on either a funded account or a personal account. So when this market gets to this particular area, I'll be selling very, very aggressively on the personal account, on the funded account, and everything. So imagine catching this trade on the weekly time frame, then holding the trade. Imagine how many pips. So that is literally just it. When you have a clear understanding on how supply and demand works, making analysis, because I see some of you making analysis, some of you sending analysis in the group. Yeah, I'm very, very glad and I'm very, very happy that you guys are learning. But some are still not getting the check on how supply and demand works. Before you know how supply and demand works, you want to know how to easily note directional movements on the market. Please just observe the market, observe where the market is going to, know the direction, and yeah, you are good to go. So I think I'm going to end to this class here. I'm going to end to this section here. If you have a question, please do what to ask before I call it today, or before we call it today rather. So yeah, if you have any question, please unmute yourself and let's ask. We have less than 2 minutes to end this section.
Hello, sir.
All right.
Yeah, please have a question. You said which base broke the structure because there are, I think I can see two bases where the gray rectangle is in there. right below it, there's another B, but then the one below the rectangle market didn't respect it, and I can see also the imbalance at the top there, but I'm quite confused because I would have
Okay.
been expecting market to break at to start going to the downside at the second piece because that's where it broke structure.
Okay. Yeah. This base broke this particular structure. But like I told you guys on trading supply and demand, you don't trade off of a base just because a base broke a particular structure, a structural low, a structural high. It means that base is literally valid. You take your base, you trade your base off of the origin. Like I told you guys, this is counter trend trading. The market is literally going all the way to the upside, but we've identified a break of structure, liquidity sweep. So this is the reason why I want to risk trading this particular market because it's a counter trend. It's very obvious that this market is going all the way to the upside, but I'm anticipating a sell. So I am trading against the trend. So what you want to do, you want to play smart. There's an imbalance at the top here. There's an imbalance here. This base is not going to hold because there's an imbalance here. So price is definitely going to feel this imbalance and go to the origin where the whole move started from. This was a liquidity sweep. Origin where the whole move started from, break all the way to the downside. Yeah, that's literally it. So I'll take more questions
Okay,
in the
that's
group. All right, thank you very much. Let's try to converse a little more on the group. I'll answer your questions on the group. We'll have less than a minute or probably seconds to end this section. So thank you guys for your time. Thank you guys for coming out to learn a thing or two. And yeah, God bless you guys. Enjoy the rest of your weekend. Please go out. You deserve it. This week has not been friendly. Go and spend some money. All right, guys. So see you guys next week.